We've been focusing on the S&P year to date, but actually the real action should be on the US Treasury. There are two reasons why I think the US Treasury are currently selling off. First, there's still a lot of uncertainty regarding tariffs. Yes, things have calmed down a little bit from the past few weeks, but we're still in a 90 days period and we don't know really the final outcome. We don't know exactly how this is going to impact the economies, inflation, and everything else. So here we still have a lot of uncertainty. On the other side also, in the US, we're moving into the tax bill territory. And there again, there's a lot of uncertainty regarding the size of this budget deficit in the US. So investors worldwide are asking the question, is 4.5 on the 10 years, is 5% on the 30 years the right price given all the uncertainties we have in the US economy, on inflation, and in tariffs? We are definitely still in a very uncertain period where investors are questioning what are the right level to pay for the US debt.
HSBC is arguably the most global investment bank, so I would think you've got some pretty good insight into how foreign investors feel about U.S. debt here. What's your sense of whether appetite is holding up or waning from foreign investors for U.S. debt here?
No, there will always be appetite in U.S. debt, for sure, but the real question, the exam question, at what price? And what we need to see is more reading regarding inflation. We need to see more details about this tax bill. We need to see exactly where the tariff will read before we establish what is the right price for US debt. Yes, we've seen people selling the US debt, but we've seen people buying it too at some level. So I think at the moment it hasn't found its right price given the current environment. But definitely the questions are being asked, and let's see where the environment, let's see where the next data take us, and let's see where those negotiations end up.
I think it's fair to say there's a whole swathe of investors out there who simply do not know what to do now. After we had the big dip, some were tactically just shuffling portfolios. Some just did a little bit of buying at lower ranges. But now that we've recovered a lot of territory, there's a real sort of question mark. Do we go up from here? Do we go down from here? You've got a call. I know it is from April, and there's a lot that's changed since then, from our target price on the S&P of 5,600, which is about 300 odd points down from where we sit today. Is there any guarantee about which direction we go from here based on how wild the news flow could still be in coming weeks?
The guarantee is definitely not. But I tell you something. We're definitely entering a new world order. And investors are trying to figure out what is this new global equation? What are those parameters of this new global equation? And it's determined by many factors. At the moment, those questions are being questioned, and we don't have all the answers. And look, over the past 3 years, we've been chasing the Magnificent Seven, for instance. I think we're going to have to discover what are those Magnificent 25 that will drive that new global equation. Investors are questioning this. As far as the S&P, you were right. We have recovered. The market was expensive at the beginning of the year, and there is a lot of liquidity out there. We estimate between $18 and $20 trillion of liquidity sitting on the sideline. So I think as long as we have correction, we'll see a new wave of investors coming in and buying the S&P market. What we will see also is investing trying to identify what are those new global stocks that will drive global economies.
What inkling do you have around those stocks? Are they going to be based in the United States? Are there going to be some European names or Asian names that find their way into the mix this time? What view do you take on those stocks?
I think there'll be global stock. As the world re-globalize, depending where the tariff uncertainty take us, we're going to see new corridor of trades and finance. You see, people are saying it's the end of globalization. I don't believe it's the end of globalization. What we are seeing is re-globalization. We're seeing the emergence of new corridor of trade and new corridor of finance. We're seeing the emergence of new corridor of trade between China and ASEAN, between China and the Gulf country, between Mexico and China, between India and the West, between EU and the
using the dollar, Patrick, and I think that's very interesting.
Yeah, between UK and Europe and the dollars also. By the end, I don't think it's the end of dollar dominance by all means, but the questions are being asked. So as we see emergence of new corridor of trade and finance, we will see the emergence of new global stock. So I do believe it won't be just US stocks, it will be global stocks. We'll see new global sectors that will drive the new re-globalization.